It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold. It's on Freshii Inc., symbol FRII on the TSX. Currently trades around $2.32, about a $75 million market cap. Freshii is a health and wellness brand with 464 restaurants in 16 countries and more than 700 points of distribution around the world. About 99% of these stores are franchised. There's 461 that are franchised and 3 are company owned. So let's look at the past 3 years and trailing 12 months results. Well, in 2016, the company had about $16.1 million in revenues. It's had decent growth to the trailing 12 months, around $22.4 million. In its last quarter, we look at royalty revenue as the most predictable and stable recurring revenues in the business. That increased 14% to $4.8 million. Same-store sales growth, however, this is where we have an issue, was actually down 3.7% compared to same-store sales growth, which was down 0.8% in Q3 2018. Adjusted EBITDA was up 29% to $1.8 million in Q3, but we would like to see that same-store sales growth uptick to a positive number. Now, in conclusion, Freshii has turnaround potential, but with significant management change over the last year and a new plan moving forward that is just really starting to take shape, the company is in the early innings at best of a turnaround story, and there's little evidence right now to see which way it'll go. The good news is the company starts with a solid foundation in terms of a strong balance sheet, $29 million in cash in the bank, about 38% of its market cap, and limited debt. The business is posting break-even results and not really bleeding cash. From a valuation perspective, the company currently trades at a premium multiple of about 35 times adjusted earnings or 19 times adjusted earnings after taking that huge cash position out. This is somewhat expensive for its segment and given its lack of same-store sales growth. If we look at multiples to FFO, the company trades at 11 times FFO or 6 times FFO after adjusting for net cash position. So relatively attractive valuations there. At present, the company is not issuing guidance on profitability moving forward. As such, and given the negative 3.7% same-store sales numbers in Q3, we would not buy Freshii. It is certainly a company we monitor with turnaround potential given its strong cash position and reasonable multiple to FFO.